So, hello and welcome. Very good morning to all of you. I can see some familiar faces, I can see some new faces. I welcome you all. So, here we are with live markets. I encourage you to ask good questions. I encourage you to also ask objective questions and something we all can learn from each other when you ask questions. Once again, very good morning. So, I start now. So, the purpose of this webinar today is multifold. And it's going to be a nice time we're going to have for half an hour. So ask me any particular questions from the recent webinar which I had on Sunday. If you guys haven't seen that Sunday webinar, you must. It's called the Introduction to the Indicator Factory. Right? So it's an introductory webinar, and definitely there's so much to learn from it. So much to learn from it. No questions, guys? No questions? So fine. So let me just show to you, step by step how some of the analysis has been coming on together. As you can see, some data issue is there for some reason all of a sudden on the 2 days back, which I will resolve, not a problem. I'm going to stick to a certain portion of the chart at the moment. And in that portion of the chart, I got some interesting things, right? So as all of you can see, just looking at the naked chart of Bank Nifty, okay, I'll just put the hourly chart of Bank Nifty. A lot of people have been asking me questions, sir, why is it to sell yesterday? Why did you sell? And why did you first say it is a confirmation only half and then later say there's a more confirmation? What was the logic? So I couldn't get these small candles, blah blah blah. A lot of questions I was getting. And some people, like, they have a tendency to think that an analyst or a professional in markets may say some things which are later than what they happen. So no problem. I explicitly showed my position also, that I've taken a position on puts on Bank Nifty, and I also additional logic which I said that a lot of my systems were giving a sell signal on various stocks or giving a half sell signal. That means they got the stock in the radar to sell. Now, when I say the radar, I mean it's still not confirmed. And when I say confirmed, I mean yes, it is confirmed with the criteria. So I got those multiple things lined up, and obviously, it is not something which is an overnight process to understand, and it is not something which is very difficult to understand also. Because in the end, all the indicators and even the ones I will be teaching about in the indicator factory code, even though some will be advanced over there, what I'm saying is that at some level, it is going to be easy to interpret once you have the hang of it. Because all indicators come from where? They come from the price. Right? All indicators come from the price. Right? So it is essential and it is very important to first understand where we are heading to. So what I'm going to do right now is you have a look at the chart, which is the naked chart of Bank Nifty. And I recommend, if you are used to a particular platform of charting, you want to parallelly open that, you can open that too. Okay. And I'm going to slowly and steadily show you what are the different aspects and how two different systems can also be generating a signal on the same trade. Because if it's a good trade, then I think a lot of good systems should be approaching that trade at some point or the other of the trade. Okay. Now, when I'm talking about a system, each and every system actually constitutes of nothing but a particular style, right? There's a certain style of things which is going on. Now, that particular style of things, one can use their brains to analyze, one can use their backtesting, observation, changing of parameter, with the different indicators. And once that is done, once that process is done with, you bring yourself to hypotheses which are very clear, and hypotheses which you have seen through different market timings, market phases. And that's pretty much all that you need to do. Okay, so I think enough people are here with us by now, and I can open up what I'm wanting to talk about in this particular webinar, right? So as you can see, one second, guys. Here we go. Just a second, guys. Yeah. Yes, guys. So what I've done is I've done something very, very simple. Okay. This is my particular screen, and in Spider you get the options to change screens, so you can have multiple screens running at a time. I've done something very simple. No such big secret sauce, nothing to hide. I believe knowledge is everybody's. Okay, and if you share knowledge, you get more knowledge. I totally believe that. So there's no such secret sauce or anything at all. I think only someone who is going to, not have some confidence on what he is doing will have secret sauces. The only reason why I have not expressly told you about a lot of parameters in the earlier videos also is because I don't want to get people confused. If somebody wants to learn, there's a structure to it, and they can join the course for once and then they can understand those things. Okay, so let's just boil it down to simple things. Okay, number one is the red arrow, number two is the green arrow, and number three is the white arrow. Okay, one, two, and three, right? Whenever I see a red arrow, it is telling me that something is coming up, something is starting. Okay, a move on whichever side the direction of the arrow is pointing to, whichever direction it is. I've kept it so simple, and I believe that systems or even trading styles should become very simple. You all can see red arrow, green arrow, white arrow. Is everybody paying attention on my screen? Raise your hands who are paying attention. There's a button there to raise your hands. Perfect, perfect, perfect. Yeah. So this is my first signal which is showing me that something to go long. I might take a position, I might not. But this is just showing me once. And when this scenario happens, it's just like a traffic signal. Although the way a traffic signal goes, the color frequency, the colors are different, right? But anyway, this is the time where I say stop being short on the market and start going long. This is the point which says that. The green arrow it says that now you can go long, higher confirmation, and the white arrow is telling me higher confirmation plus a good move about to come. Now this is trading, guys, and you all know trading is not about analysis. Trading is about execution. What is trading? Trading is execution. And to execute anything, you have to consider the fact that market does various things in various ways. We try to get closest to how the market is moving, to capture the things by understanding of how the market is moving. So here we are capturing north of almost 200 point move, right? Around 200 points, 175 points, which is very decent. Which is very decent in a matter of say 1.5 hours of markets, right? Now the move stops there. There are ways to get the potential target, which will be in the next part of my discussion. So I booked out. I don't even remember exactly which part of the candle I booked out, but I booked out, right? Within this upper half, upper one third region, I booked out. because it is about execution. No matter which system you are using, no matter even if you are using an algo based thing, there are chances of things with like slippages, like executions which are not which end up being improper. Right? So you need to be careful about the execution. That is why I say know your system so well that you don't trade the system is trading you. The next point, the next point is that this is the first signal of something bearish coming up. I can smell something bearish, right? And then it started coming up in more vivid manners, started becoming a confirmation with a possible momentum. That's all. I went long on puts. In between this to this, or under this candle formation, exactly I can't pinpoint, but I went long, right? On puts, on puts. And I waited because I have got the trend confirmation, I have got the confirmation for momentum, I have got multiple things lined up, right? Now, when those multiple things are lined up, sorry, somebody is asking a question. Oh, thank you, Ankurji. Honestly speaking, they are very simple. They are very simple. These are not anything amazing indicators. They are very simple. And you know what happens is when I put simple things with a simple logic, okay, there are other systems which are a little more complicated. I want to make it simple, at least to look at. At least to look at, it should be simple. Because when I teach you all how to make indicators, how to make your own system, you should end the end point should be a simple system. If the end point is a simple system, consider your job is done. Okay. And as I say, I'm an open book. That is not a problem. That is not a problem. I'm an open book. So if I'm seeing a live market and I see my things are coming in a simple way, it is far, far, far more easy to go and execute. Now I can get simple things. People say, sir, ये तो ऐसा ऐसा कभी कभी होता है. हाँ, कभी कभी होता है. लेकिन जब होता है तब जोर का होता है और आप देख सकते हो बैंक निफ्टी में ये लगातार 2 दिन हो रहा है. तो ऐसा भी नहीं है कि कुछ ऐसा हो रहा है जो मैं आपको 1-2 दिन के अंदर नहीं दिखा पा रहा. और ऐसा भी नहीं है जो बहुत सारे स्टॉक्स में हमेशा होता नहीं रहेगा. अब मैं क्या करने वाला हूं, अब मैं 15 मिनट चार्ट पे आने वाला हूं, वही टाइम पीरियड आपको दिखा रहा हूं और मैं दिखाता हूं आपको बॉलिंजर बैंड्स. ओके, नाउ समथिंग टू टेक अवे. आई होप एवरीवन इज मेकिंग सम नोट्स. समथिंग टू टेक अवे फ्रॉम हियर, राइट? नाउ Bollinger Band, this particular Bollinger Band is just a very simple 20 period moving average in 2 standard deviation Bollinger Band. So 20 period moving average and 2 standard deviation. Very simple to understand. 20 period moving average is the mean, the moving average, which is the middle line, and 2 bands standard deviation. That means a standard move from the mean. When in a standard move from the mean for a long time becomes close to that, that means volatility is going down, right? Volatility is going down, right? And then there can be an expansion from that volatility. Sumit is saying, and Sumit is one of my course students who is converted to the inner circle member in the last month. He's completed his course with me, and he says that it is a type of pattern I have seen. Okay, and this time of candle volumes low. Okay, preparing for big movements. Absolutely. So he has seen that. He's probably observed Bank Nifty. By the way, in the previous live session, Sumit, congratulations on your Titan trade, which we had all discussed. And Sumit had brought it up also. So that's great. And so what I'm saying is that when the standard deviation is consistently low, that means the volatility is crunching in this time frame for these parameters of the indicator. Now, when the volatility is crunching and then slowly it is breaking the lows of the volatility, rather it is breaking the lows over here of the price as well, but it is breaking the lows of the volatility, and these bars, these bands start expanding. These bars start expanding. This expansion leads to later contraction. Okay, expansion leads to contraction, contraction leads to expansion. There are far more formal principles of the Bollinger Band. For that you can join the course, but I'm trying to put it in simple ways, how much ever I am able to. Expansion is leading to contraction later, but right now contraction is leading to expansion of the Bollinger Band. That means a trend with momentum and with an expansion of volatility all put together is something where traders live and die. And the good traders thrive. You have to thrive on volatility, not complain about volatility. If anything you should be complaining about, you should be complaining, oh, the market is not moving, or it's 3:30, I wish I could trade more. That is how you should like this game. Okay, so we can see clearly that this expansion which is coming up in a slow and steady manner. Now I come to the flip side, the other part of Bollinger Band. You see this. Now somebody will come and tell me, and rightly so, somebody will come and tell me, sir ये तो देखे ही नहीं आप, यहाँ तो expansion हुआ लेकिन हो के भी नीचे आ गया. That is what I'm trying to say. That is what I'm trying to say. That the prices tend to get conditioned. Prices tend to get conditioned to volatility. Meaning that if there is volatility which is coming up suddenly, price will not be able to take that in. So here we see the difference between the lower and the upper band. You can clearly see from the lower end of the band to the upper half of the Bollinger, this entire move is traversing, and then there's a sudden move which is breaking the upper band. And look at the comparison with this move. There is a slow, steady movement traversing and then staying over here. Clearly we can see, and then slowly breaking. So it is very well conditioned, and slowly it is making its move on the downside, right? And this slowly gathers pace. Now it is closing below the Bollinger Band, lower band. It is crossing it. It is making lows below it. These at the initial stage are super bearish signals. These at the initial stage are super bearish signals. At the after stage, at the last stage of a move, when it penetrates the Bollinger Band, it is a opposite side signal. So in this case, it was supposed to be bullish, it becomes a bearish signal. Are you guys with me? Raise your hands who are understanding what I'm trying to say. I know it can be a little difficult, and please show me by raising your hands what I'm trying to say you're understanding. Loud and clear. There's a button to raise your hands. If you have any questions, you can ask. So the Bollinger Bands tend to behave in a certain manner, and both these are actually opposite inferences. A lot of people I meet, they have confusion about Bollinger Band. They say sometimes the high above the upper band, the close above the upper band are bearish because it is going in the extreme of volatility. They're not wrong, but the context is different. It can be bearish when it goes far above the upper band. It can be bearish, but this context is so different from it being on the direction of the trend when the lower band is crossed. It is actually far more bearish, right? It is not bullish that the lower band is crossed. And I can show you the opposite scenarios for this as well as opposite scenarios for this. That is the whole purpose of understanding Bollinger Bands. Now I'll do something interesting with the Bollinger Band, right? I will do something interesting. I'm just going to take the 50 period Bollinger Band instead of the 20 period. Let us try this and let us see what is happening if I do that. Right? If I take a 50 period Bollinger Band instead of the 21. Now you look at this. Now any parameter changed to a certain time frame difference can either be more reliable or less reliable. Obviously, if we are talking about a certain chunk of the price move, a phase of the market, the higher the moving average, the more long lasting the signals, the more long lasting everything is. Right? Now you can see what I'm talking when I say an extreme. So prices did not spend a lot of time after crossing the middle band. They did not spend a lot of time. They spent hardly two candles over here. After crossing the middle band, they didn't spend a lot of time. And you will notice this. You take my inference. Okay, there are no guarantees that you will observe it the way I'm observing, but you will, if you notice carefully, you will notice if after the middle band is crossed. Okay, after the middle band is crossed, if the price is not spending enough time in the middle band and then just blowing above the upper band, it is actually the bearish signal, because it is going to, the market are going to reject extreme volatility all of a sudden. Markets are likely to reject extreme volatility all of a sudden. So that's what markets are doing over here, rejecting the extreme of volatility. And when the market is slowly getting conditioned to volatility, which is low, slowly it is moving. First, the gear is shifting to a direction. First, it is taking the gear shift, and then it is increasing the speed. आप गाड़ी को रिवर्स करते हो, आप पहले रिवर्स को बैक से फॉरवर्ड करते हो और उसके बाद आप स्पीड बढ़ाते हो और दूसरे गियर पे जाते हो. So these are gear shifts in price. All technical tools are not about a reversal in price. Many times they are about a gear shifting in price. Say for example, from in this case we are going from the reversal is happening, but it is not happening from up to down. It is happening from sideways to a downward reversal. And here we are seeing a different kind of expansion. And now we are at the price extreme, which is below the lower band. So even though it's a 15-minute chart, now second thing which people misconceive a lot. Second thing which people can misconceive a lot, very simply, what they misconceive is they think if it is going extremely this low below the lower band, logically, what will you think? Well, logically, person like me and you will think what? Now it is the time for it to fly, right? It can literally go up. Well, in markets, anything can happen. But what I generally am going to approach this with is my general analysis on the basis of Bollinger Bands. On the 50 period Bollinger Band, it is closing below. It is literally trading below it for a very long time. For me, this is super bearish. Okay. Now, in case there is a pullback or a sideways movement, this volatility will get an opportunity to contract a little bit again and then expand. This volatility which is expanded all of a sudden, okay, this will get opportunity to contract and expand. And the second thing which can happen, so any pullback for me, from only a Bollinger point of view, I'm saying, any pullback for me should actually be a better sell position than a buy position. Any pullback should be a better sell position than a buy position. The second thing which I'm going to come to is that there can be a time correction also. So instead of a sharp pullback like this and then fall, and this completely for educational purposes, there can be a sideways movement and there can be a fall. Because when there is a deviation in the end, even if this is a Bollinger Band, this is still a moving average. And one of my videos I've explained recently how moving averages are the mean, and a deviation from the mean and a move attracting and repelling from the mean are normal things to happen. So it is repelled from the mean quite some time. Now it might get attracted to the mean, or the second thing which can happen, if it chooses to be sideways, say for 1 day, half day, 2 days, whatever, then the mean will catch up to it. The mean will catch up to it. This particular line will start behaving something like this over time. If the price starts behaving like this. Now, of course, in markets, I always say, or in any business, any entrepreneurial endeavor, I always say that a fresh mind, an uncluttered mind, a go-getting attitude, and a willingness to do the work is all what you need. But in markets, experience has a different connotation. In markets, experience means to live through the candles. You take a 1 lot trade or take a 50 lot trade, that is not the criteria. If you have experience living through such candles, You are going to be able to decipher certain things with confidence, decipher certain possibilities. Now, in a given scenario, if somebody is trading aggressively, one might want to go long or might want to short puts. I short puts also in certain occasions. So when I see an extreme, I know for a fact that if I'm right on this trade, either I'm going to see a sharp reversal or I'm going to see a flat sideways movement. In either case, the put prices should fall like crazy. And when I say naked options, do not short naked options just like that. When I'm talking from trading point of view when I put the stop loss immediately on the option. So I short options and I put the stop loss immediately on an option. That I do in this area. That's it. And then I wait for the market to go up a little bit because of, especially if they're weekly options, because of the theta decay, because my delta which I can choose is higher if I'm having a stop loss. The options can crunch in prices, even if the market is pulling back or just going sideways. So these are the kind of trades you can take here. Here I said you should go long on options because if you're seeing an expansion of volatility, options can have the potential to move a lot. Now, people tend to do incorrect execution with options. They first take the trade, they see a few jitters on the trade, and then they get out on the option. Wait for it to follow through, wait for it to go to the low, wait for it to go to the later lows. Okay, why? Because as option is moving for you, it is going to give you at an increasing rate. That was just a small bit, my 2 bits on options, just for your interest of execution, right? Any questions anybody has? Anything in particular you want to ask? And there will be some interesting questions. There has been a lot of questions, different kinds coming lately. If I'm able to answer at this moment and show you something interesting, I'll be more than happy to. So somebody was asking me, why am I not showing my strategies full on the sell side? Why am I showing it on the buy side? And I did mention about my sell strategy showing some signals, but why am I not showing it on the sell side? Somebody asked me that question yesterday, and I think that was a very pertinent question. The reason is when the market is moving, okay, on the buy side I have different strategy, on the sell side I have different. They may be similar, but they're not the same. Okay, because the nature of movement when market is going up and market is going down are completely different. So one of the key things to be understood is that when market is giving you, okay, when the market is giving you something of great importance, okay, just a second, there's some question which has come up. When the market is giving you certain kind of an important idea, and if it is on either of the direction, in the bearish side what tends to happen, if I have to show you a signal, I have to put multiple things, complicated things. And if I put one, I would be not giving you the complete picture, because if my uh, bull side strategies have 3 4 conditions, bear side strategies have 3 5 or 6 conditions. Now, Ankur ji is asking about the stochastic indicator. Very good question. He's saying, what is the stochastic indicator? Can I use it with Bollinger Bands? Well, it is very good that you are asking such valid questions. First of all, yes, stochastic indicator is very, very interesting. Okay, very, very interesting. And stochastic indicator, one second, guys. Yeah. So I just ran a simple, okay. The somebody asked me to run how my MT20 is going on, okay. And stochastic indicators, I'll come to them. So I ran my Mohak T20 just now, and these are the signals which are coming. Aisha Motors and HCL Tech. And as you can see, it is not very difficult to use this software. The moment I click Aisha Motors, I'll get the chart. HCL Tech, I get the chart. And these are MT20, better to be used for the buy side, better to use and in the morning, early morning. Now I don't have the parameters on the chart for the confirmation, but you can track these two stocks and see how it is going to go in the next few hours, right? See how it is going to go in the next few hours. Also, they are meant to be on 30 minutes, so I'll just change the criteria. Yeah, perfect. Now coming to Ankurji's question on the particular indicator. He says stochastic. Now, stochastic indicator constitutes of two lines. One is the fast line, one is the slow line, and it has a complicated calculation, which I am not going into, and I did not on purpose go into in the free webinar because it's a very complicated calculation. Now, problem with stochastic is, just to clarify your doubt, problem with stochastic is a very sensitive indicator. Okay. Now, until you know the calculation, you sit, read through, get some reading material on it, go through the calculation, and in this, you are in my students group of the technical analysis course. So, of course, I'll be sharing some interesting handouts and material. From there, also, you can read. So, what is going to happen is, and we are going to come to indicators in our classes also. And what I'm coming to is the fact that stochastics have to be modified to be acting in a better manner. And if you want to combine it, you have to see through certain market phases. You take up 20 days of market data, for example, and use that 20-day over at least 10 different stocks. And then you make your inferences how it is working or not. But what you are saying is a good idea. You want to get important things together. You're going to mix volatility and momentum. But there are certain missing points I can feel over here, which you will only discover when you sit and test it. It is going to be a trial and error method. I have also done a lot of things with trial and error method, and it is how you have to develop things. It's been 9 years in this profession, right? I've done a lot of trial and error, but I've understood the art of being patient to get to the answer. And all of you need to do that very importantly. And I feel, just as a general, I'm no big shot. I just as a general person who finds himself in a place where a lot of people approach him. uh, One thing I've noticed, why markets behave the way they behave, why markets repeat their behavior, is because, and truly after 9 years in this profession, I've realized one thing, that people don't change. They don't change when they are given a better option. They change when change is the only option. That is one thing I've clearly noticed. And if each of you takes their baby steps in whichever manner, I'm not saying that you have to understand indicators or choose the indicator factor, whichever manner you want to take those baby steps towards your progress and learning, do it. Just take those steps. Don't wait for a bigger capital. Don't wait to that you have to trade tomorrow. Don't wait for a trading opportunity tomorrow. Look at the bigger picture. Go and make your way of doing things. It can be a discretionary thing, it can be a systematic thing. I do both. If I was to take up the Bank Nifty move yesterday, I can really cut it open with Elliott wave theory, and some of my students who are here can also resonate with what I'm saying. Yesterday, Bank Nifty move had Elliott wave, subwave, which was very powerful. I can cut open that and do that also. But the thing is, I let things come to me. Any good system, okay, if three of us have a good system, three of us have a good system, the three of us are going to get the same signal, right? So it is completely fine how you are approaching the market. But if your approach is consistent in the market, if your approach is consistent in the market, what is going to happen is you're going to find a consistent input leading to a consistent output. A consistent input leading to a consistent output. And if that consistent input is leading to a consistent output, that's all you need. That's all you need. And uh, we were having these discussion on. I'm just making the chart very blank, very blank, just to give you a Elliott wave perspective. We're having this discussion on the students group, and this is how I would come to a trade. Okay, this is how I would come to a trade. Over here, over here, it is not just about a breakout being price going above any level. People think technical analysis is easy. They think it's just you go above this level, it will go 500 points higher. No. Yes, there was a potential buy with this structure. It did lead up, no doubt. But then we were having a discussion as students group where all the past students are there, and someone said that let's check out Bank Nifty. Even I said someone was already long on it, and then one point which I came out with was that there is no structure present in this move, and if there is a move with a breakout and there is no structure in it, I'm not saying in all cases, but in many cases there is a chance that this will not lead anywhere. So let's wait. Then we came to a point where even I was convinced that possibly a structure is coming up. And if we close higher and we break out from here, there's a chance we can give to Bank Nifty. And then it started to move lower. It started to move lower. Perfect. It started to move lower. Now in this entire range, I see one time it is showing me that the market is rejecting higher prices. The second time in this area, again there is a bearishness. This area is smelling so bad when it comes to the candles, and you can watch my candlestick video on YouTube. Okay, you can see that there is a lot of bearishness which can be seen over here. So a bearish bias, and I'm totally talking about the discretionary side of trading. As you can see, the bearish side of trading. Okay, you can see the bearish side of Bank Nifty. It's really smelling so bearish in these areas. When the Bank Nifty is going to come down from here, and yes, you can include your knowledge of indicators also here and add on to that, not a problem. When the Bank Nifty is coming here, okay, there are certain pullbacks. Now, as a trader who is looking at Elliott as an important point of interaction of analysis, right? I see that there are clusters where buying and selling came and crystallized. When buyers and sellers came and crystallized, and exactly these points are the points where another fall came yesterday in the morning. So if that has happened, another fall has come yesterday in the morning, and I am looking at the candles now. I approach the candles. I always tell to all my students the candles are showing us also the emotion of the market, not just specific candlestick patterns. They're showing us the market emotion also. There is a lot of bearishness in the market emotion which is being showed. And I noticed that there is an important interaction point with the gap zone. The opening end of this gap zone has acted as an important interaction point. If it breaks, if it breaks, we can see hell break loose. We can see bearish moves coming. The structure over here can lead. There is no structure over here. It did not lead to a breakout sustaining. The structure over here can lead to a sustainable breakout from this range. Right now, from the wave counts point of view, if I have to calculate the fact that this is a wave that is there to continue, I'm going to see either a wave 1, 2, 3, 4, 5 over here complete. This is wave 1 complete, one wave cycle complete by wave 2. This is wave 2. And we may be in the wave 3 at the current moment. And wave 3 is not something you want to go against. Wave 3 is something you want to be with. So being a positional trader, being or being a short-term trader, if you're thinking on the more short direction, it is better. Now what I showed with the 50 Bollinger Band, that was a different thing. That was a different perspective, and that was an aggressive perspective. That you can go long. If something is falling, you generally shouldn't go long. But yes, if you are aggressive trader, if you want to find specific areas for certain sideways movement, you can right now also choose to do certain things. But that is super aggressive. And personally, I'm not that aggressive. By now, everybody knows I wait for my confirmations one, two, three, as many as possible. As many as possible. I'm saying this very openly. I do get aggressive ideas which work out also. And but I will be telling you and guiding you wrongly by saying that I do that, because if I start doing every trade which is an aggressive trade, I will start spoiling my mindset and I will start spoiling my approach to the market. So I tend to cut down on the aggressive trade to hardly 1% of my trades are aggressive. All the rest are medium risk trades. And a lot of them, especially the ones I like taking and cherish waiting for, are the low subjective risk trade. When I say low subjective risk, I mean my subjective understanding of the move, that is low risk, right? So, guys, I think we will wrap this up for the day. Lots have been, there are lots of takeaways, and I want to keep this video so that on YouTube, so that everybody can go back and learn from this. So, thank you so much for joining me, and I'll be putting the link below of my Telegram channel, which is coming up for the Indicator Factory course. You can find the details over there, right? So, thank you so much, guys, and it was a pleasure being with you guys live in markets. Right, I said that I'll be there for about half an hour, and we've crossed quite a mark. So anyway, thank you so much. I really got to go with certain trading and certain other things I need to do, and I'm sure you have had a good time and made a good utilization of your market hours time. Yep. Thank you so much. Thank you, Puneet. Enjoy, everybody. Thank you, Sumit. Take care, guys. It was great having you all. I'll see you around soon. Absolutely. Okay, my pleasure, Santaramji. And genuinely, if you really want more and a more structured knowledge, do join the course. My purpose is to teach. My purpose is to spread knowledge. Okay. Now, as a part of the course, what happens? Knowledge becomes really structured with practice, with a lot of observation, specific things. That has different impact, and only a course can do that. But anyway, I'm there for anyone if you want to contact me regarding any question you want to ask. Course or no course, I'm there for you. Okay. Take care, guys. Have fun. Goodbye. Enjoy.